How's it going? Hope you guys are having a great day. If you're new here, this video is a continuation of a previous video called How to Get Started Investing Step by Step. Please watch that video first, it will help you guys out. You can find it in the description. For this video, the goal is to dive into what a stock is and how it relates to the underlying company. And again, my goal with this whole channel is to provide as much helpful information as I can from my past experiences. Please write in the comments section any questions you may have so I can address them in future videos and help you guys out as much as I can. Now let's get started. We're going to use my Facebook position as an example. So here we are. I currently have 30 shares of Facebook, stock ticker symbol FB for Facebook. So what does 30 shares actually represent? First off, Facebook is the stock of Facebook Incorporated, the corporation Facebook. As any corporation, when formed, the company is equivalent to stock. What that means is really when you form a corporation, you have to divide that corporation into a different quantity of shares, usually 10,000 shares or so, and over time that's divvied up even more, so shares are accumulated with time, but it all refers to that one stock or that one company. Each share is a fractional ownership of the underlying corporation. So let's jump into Yahoo Finance now to take a deeper look at Facebook and what I'm talking about here. So this is a Facebook Incorporation. That is the underlying company. And what we're looking here is just a few of the statistics on Yahoo Finance statistics page. So you got market cap of 593 billion. This means between all shareholders, we all own this total. I fall in owning $6,241 at this current market cap, right? Or of course, if you divide that into that, I own 0.0000001% or 1/1 millionth percent or 1/1 millionth of Facebook. Of course, looking at it that way, it's very, very meaningless, and it makes you think, what $6,000 is a lot of money. I'm putting into here, what is it worth? So, of course, this is in reality what is happening is you do own a percentage of the underlying business of that big company, of that stock. However, the way to really look at it in terms of an investment is not to look at it in how much you own of that company, but what you're going to get for the share that you have of that company. So right now there is 2.41 billion shares outstanding. I own 30 of those shares. So what do my 30 shares actually mean? So I'm actually going to jump into Facebook statistics on Yahoo Finance. And we're going to come down to look at EPS, or earnings per share, right here. So what this is, EPS stands for earnings per share, and this is Facebook's earnings over the 12 trailing months, so trailing 12 months, TTM. So the last 12 months, divided by the 2.41 billion shares that we see here. And that's $6.26. So that means Facebook profits $6.26 per share that it's at. Currently, that's worth $208 each. And one thing before going into that, what are these shares? These shares outstanding. What is this 2.41 billion? If you think of it this way, let's say there's corporation is built out, so you have different shares. So when you started a company and you have two co-founders, you could legitimately go and say, okay, we're going to start with 2 shares. Instead of 10,000, which is usual, you're going to start with 2 shares. I get 1 share, you get 1 share. We both have 50% of the company. I have 1 share of the company and you have another share. There's only 2 shares total, so we both have 50%. However, if of course, to be more practical in the future, to be able to sell to others and expand, you start with 10,000. So let's say shareholder one gets 5,000, the other shareholder gets 5,000, you still have 50% ownership because there's 10,000 shares, you have 5,000, so that's 50%. So it's pretty much, it's nice and easy like that. So it goes back to the same thing as the percentage off of the market cap. You can do it from the shares. So I would have, for example, 6.26, 30 times that is what is attributed to my stake. So 6.26 times 30, so $187.80. That is what's attributed to my $6,000 investment. However, this is trailing last 12 months. Of course, I invest is towards what the future will hold. And the future, of course, the best way of doing it is really diving into the 10K, diving into the 10Q, reading and researching the earnings calls and all the information you can grab from Facebook. Right now, what I'm doing with Yahoo Finance, this is only a sort of glimpse at what the underlying business is showing. So if I go to analysis here, so analyst average is 9.15 for next year. So that would attribute to $200 some on mine, or $274 of earnings. Now, there's a few different things here. One is Facebook is a growth company. What that means is it's expected to grow massively over the next few years, next 5 years or more. And it does not have a dividend because the idea is the shareholders will be rewarded based on the growth of the company, the appreciation of its share price going higher after we buy it, versus having to pay a dividend because the share appreciation won't be as great. And you can see this by what the analysts are expecting here of a 26% growth this year, and a 20, which is pretty much done to 2019, and a 21.7% growth next year, so 2020, which is the year we're going to come into soon, right now-ish. So that is pretty good growth, especially for a business that is at 593 billion market cap, and that growth is for their revenues. And then based on your revenue, then you get your net income. Based on your net income, you can get what the future market cap can hold. And so that ties into, and again, this video is, I'm just, pretty much dove into what corporation is and what the share count is. And that's pretty much what it is. And now what I want to show you here is EPS, analyst reviews, and sort of just a glimpse at different things. And of course, I will make different videos in the future covering specific topics, because there's so much in here, so much to cover. But so back to what we were just, finishing this glimpse. You have the trailing PE and the forward PE. This is what multiple you're paying on that. So we saw $6.26 down here for the current EPS. That times 33 gives you the 208. So meaning you're paying 33 times, $33 per dollar of earning in this current 12 months, let's say. And then in the future 12 months, we're looking at $9.15. If you buy shares today, you're buying it paying $22.74 per $1 of earning power per share. And that's just what it is now. In terms of valuation, how you can get a valuation for that is definitely going to be something we have to look at in a future video. I know many of you guys probably have more questions than answers right now. All right, so a quick recap. A stock is equivalent to a corporation. A share is a slice of that stock. The underlying asset that the stock represents is the corporation, as we saw with Facebook. When investing in the stock market, you want to keep in mind that in the long term, the company's stock will reflect the performance of the underlying business. By saying the business and understanding the potential of that business for the future, that is how you can start to see the potential return of your investment. By looking at the last 12 months and expectations for the next 12 months, we can only look at where the evaluation sits at today, but the key is studying what future potential the underlying business has. I hope this introduced the idea of what a stock is and how the underlying business really does affect this. And I will make a video following up on various ones of these things. Definitely comment down below which one you'd prefer to see sooner than later, and I'll work on them. Thank you very much for watching, and I hope this helped you guys out. And don't forget to like, subscribe, and hit the bell for those future videos. And thank you guys. See you next time.